Now for a check-in on the day's markets, we're joined by Evan Lucas from Investsmart. Evan, thank you for your time. How are we shaping up at the beginning of the week?
To be honest with you, Annalise, it's going to be pretty quiet for us here. It is going to be a positive day, but the reason I say that is that pretty much over half the country is away on a public holiday. And normally on days like today, we get quite sort of strange trading. So it will be positive. SPY futures are telling us that the US had a very good finish to their week after what was a very rocky end to September, start of October last week. But it will be therefore quiet in terms of volume. So today's numbers are going to be always a little bit tricky to read. Throughout the week, though, it does get quite interesting. There's a lot of data overseas and there's a lot of stuff coming out from the US. And for that reason, whatever happens today, I think you could ignore and look towards trading at the end of it. So markets today will be positive. It's more around what happens towards the end of the week as we build towards the US Federal Reserve and also more meetings out of the ECB.
There's been some interesting data come out in the last week, and we're expecting some more this week. In particular, it's really interesting to see what's happening in the consumer spending space, because there has been a theory that the Reserve Bank did bring forward this interest rate cut so that the money went through to mortgage holders, so they would be spending money in that key Christmas period.
Yeah, so consumer confidence is out on Wednesday, and that sort of goes into what you're alluding to. Last week's retail sales were weaker than what we forecasted. So expectations on a consensus basis had been for retail sales to rise by 0.5 of 1%. They only rose about 0.4. So the June and July rate cut that we'd got were all in those figures because it was the August numbers, and they weren't as strong. Probably need to put a caveat. August tends to be quite a fairly sluggish month in retail sales anyway. It's what comes on, as you alluded to, probably actually for this month and then the next month leading into the Christmas period. You've also now got all the new online numbers as well. So you've got the Black Monday and also the Super Friday numbers, all of that. But confidence is interesting because it's actually quite sporadic. If you look at the different sectors inside what's due on Wednesday, those that are sort of confident on buying a house at the moment still remains quite strong. In fact, it's getting back to euphoric levels, probably from those interest rate cuts. But expectations around buying a large household item, things like a car or things also like fridges, etc., that's actually contracting, and we're not that optimistic around it. So it's really patchy. And with all of that data and all of those rate cuts, it's still not really driving confidence forward. And the reason for it, the other part of the whole thing you need to look at is the forward 12-month expectation of family finances. That is still very much in a pessimistic view. And therefore, none of that confidence build that's coming from the RBA with cutting rates is actually flowing through to the average user. And that's, again, there's a push-pull factor to this, is that if the RBA is cutting rates, there's a genuine fear factor there. And that, I think, also is why confidence isn't moving.
Yeah, absolutely. But one market that does seem to be picking up is the housing market. We know at this time of year people tend to come out of hibernation a bit and start looking at house auctions and things. But those figures are quite promising.
They are, and you're right. It's also this time of year, so that's probably put that out there as the caveat as well. October is the biggest and busiest part of the year for housing. The 23rd of October is the absolute peak of the market, so they call that Super Saturday. So keep an eye on for that. You're right, Sydney-Melbourne is jumping quite strongly. The movements through the last 3 months has been very, very good. The other thing that's starting to show signs of turning around, which had been possibly why a lot of people have alluded to why prices are up, was that supply was incredibly low. In the last 3 weeks, supply is now back to levels we saw in around about 2015. So that is starting to show that with the price momentum, supply is coming back on, which means people are more confident they can actually sell their house for the price they expect. So those two things, they are a positive. That's probably what the RBA wants to see. But again, it's a part of the economy that we already knew was doing okay. Yes, we had a year and a half of contraction, probably not a bad thing considering the run-up to 2017. It's other areas. Can we actually see it going into wages? Can we actually see business and business confidence picking up to justify all this? So housing is doing well, no doubt about it. It's whether or not we can get it in other areas of the economy as well.
Absolutely, and plenty to watch this week. Evan Lucas, as always, thank you for the update.
Thanks, Annalise.